Did you know that in 2017 and in 2018, Starbucks has opened up a new store in China on average every 15 hours, which means they opened up almost 2 stores every single day for almost 2 years. Starbucks, being the massive company that it is, for the last few years has been experiencing stagnating sales and plateauing sales in the United States, its main dominant market. In particular, we see a major slowdown in growth in 2015. Their 2015 annual report showed a net profit of $2.7 billion. Fast forward a couple years later, and in 2017, their most up-to-date annual report, they show a profit of $2.8 billion. So in other words, Starbucks' bottom line has been increasing at a measly 1 to 2% in these last 3 years. And the stagnation in their profitability has reflected in the stagnation of the growth in their stock price. Starbucks relative to the S&P 500 in the last 3 years, you can see the large divergence these two respective entities are taking. At the time of this video, September 2018, if we backtrack exactly 3 years ago to 2015, the stock price is down negative 5.38%, while at the same time the S&P is up 44.62%. Obviously a very staggering difference that probably has shareholders impatient and disgruntled. As shareholders have become increasingly impatient, management has been revving up the engine in the Chinese market to come to an answer. Rather than reinventing the wheel and focusing on innovation, Starbucks' main attempt here in a market much bigger than the United States. China's millennial age group, in and of itself, is larger than the entire US population. At the same time, the millennial age group in China does see coffee as a preference in regards to its beverage of choice, at much of a contrast to prior generations. With the size and the beverage choice, it does seem that there is a lot of opportunity for Starbucks in China. As their economy continues to grow, so with it does an emerging middle and working class. And there are positive signs for Starbucks in regards to its success and growth in the Chinese market. If you look at their most recent quarterly filings, ended July 1st, 2018, there are a couple of interesting figures that we can take away from this report. One is that the 3 quarters ending July 2018 relative to the 3 quarters ending July 2017 shows growth in China and the Asia Pacific increased nearly 10%. In the quarter that just ended, July 1st, 2018, they opened up a total of 511 stores, 257 coming just from China and the Asia Pacific. So in other words, it looks like the dominant growth for Starbucks going forward is in China and in the Asia Pacific. They increasingly become a more important part of their revenue segment. If you look at their total store count, which is at 28,720, the China and Asia Pacific market is near 30% of its total store count. Revenue as a whole was up 9%. Revenue in China and the Asia Pacific was up 36.9%. By the third quarter in 2017, China and the Asia market was 14.26% of the total revenue. By Q3 2018, China and the Asian market was almost 18% of the total revenue. As it stands right now, just in China, the most recent figures show Starbucks to have 3,300 stores with about 14,000 in the United States. With the growth trajectories, they expect that by 2022, their store count in China will be near 6,000. For all existing shareholders or investors looking to be shareholders, you do have to stomach the idea that it may be some time before Starbucks gets it completely right in China. As we said earlier, the stock price has been stagnant relative to the market as a whole. The market in China is much larger than the market in the US. There is potential there, and the China market is a major catalyst. We want to thank you guys for listening, and once again, happy investing.